Hello everyone, I am Chen Jun. Today I want to share my latest investment views with you. Chinese stocks, especially quality players in certain sectors, performed very well in 2020, despite the severe impact of COVID-19 on the global economy and society. The fund I manage focuses on China's new economy. It returned 73% in 2020, ranking in the top 10% among peers. The outstanding performance is attributed to the fund's core holdings in alternative fuel vehicles, photovoltaics, and pharmaceuticals. In 2020, such an investment target paid off. We were rewarded with these stocks outperforming the broad markets. As 2021 starts, how should investors maneuver their portfolios? We believe now comes a new era of technology and innovation. Quality Chinese new economy companies remain in focus. We are optimistic about these sectors. The valuations edged up after a rally in 2020, making retreats likely over the short term. The profit growth of these companies will help digest the relatively high valuations over time. Some subsectors that only begin to rise see ample room to grow in the next 3 to 5 years. Also, we foresee a real pickup in the pace of development for autonomous vehicles and new smart hardware in the coming years. These technologies are also expected to generate a substantial amount of investment opportunities. Now, let's take a look at the following specifics. Firstly, let's discuss the value chains of the electronic vehicle industry and where we invest with high conviction. The shift to EV is indeed a remarkable revolution that will not only change the auto industry's landscape, but profoundly impact the petrochemical industry and the global auto industry. China has been a staunch advocate for the alternative fuel vehicles industry in recent years. The sector has been gradually entering a healthy growth stage after experiencing massive subsidies, rapid growth, and all kinds of market chaos. It is clear that China is now the world's largest electric vehicle manufacturer and a major contributor to electric car growth. China's technologies in motors, batteries, and controls stand at the forefront of the global industry. In some new technical fields, such as solid-state batteries, China is already a global leader. In fact, one of the world's best and largest suppliers of car batteries is a prime example among our investments. The company is currently one of the world's largest suppliers of automobile batteries. We have also invested in a number of exclusive automobile component manufacturers, such as the exclusive supplier of the thermal management system components to Tesla. Meanwhile, Chinese electric car brands are increasingly popular among consumers. There is a lot to be excited about for the future development of vehicle production. In terms of current industry development, 3 million alternative vehicles were produced in 2020, and we expect this number to grow more than 3 times by 2025. Ultimately, we believe that 60 to 70% of the world's cars will be electric driven. By then, the annual production of EVs will be 20 times today's number. Of course, it could take decades. We have strong reasons to believe that industry chains involving China will continue to benefit from this shift, as Chinese companies have already been pioneering in the world. Next, the photovoltaics industry. China is already the world leader in this industry in terms of production capacity, cost, and technology. Thanks to the committed manufacturers in China, the cost of photovoltaic power generation has fallen significantly. As such, the vast majority of regions in China now enjoy fair prices for this technology. As you can see from the chart, the installed capacity of photovoltaics will grow rapidly in the next few years. To capture PV technology development, we do not confine our investment in the traditional industry chain, but also heterojunction equipment makers. Heterojunction that improves electricity conversion efficiency and reduces costs will be the focus of the PV industry in the next decade. Last year, many manufacturers began to invest in new heterojunction production lines, bringing numerous orders to equipment manufacturers. It is expected that the cost of electricity generation through photovoltaic will continue to decline. making it the world's cheapest and most used energy. The Chinese government has already set out its goals of reaching peak carbon emissions by 2030 and carbon neutrality by 2060. This agenda guarantees high-quality growth for this industry. Thirdly, let's discuss the pharmaceutical industry. Pharma companies in China used to be heavily concentrated within proprietary Chinese medicine and generic drugs. However, as technology has advanced and investment has increased, many outstanding innovative drug and medical device makers have emerged. In recent decades, the Chinese pharma market has mainly benefited from the high-speed development of the innovative drug market. Following the pandemic, China's leading pharma players are still considered as being top quality for investment allocation. On the one hand, this pandemic has not affected research and development among Chinese businesses. Instead, the pandemic has propelled overseas capacity to reshore to the mainland. Hence, leading Chinese pharma companies saw their penetration rate and market share expanding, both of which have been beneficial to their long-term development. The leading pharma companies that we have invested in will continue to benefit from the industrial growth globally, while continuing to be based in China. On the other hand, as we enter the post-pandemic era, China and the world as a whole will continue to improve the infrastructures of medical and healthcare systems. This will increase the demand for sophisticated medical equipment. In fact, a leading medical equipment company that we invested in has made a remarkable contribution to the combat against COVID-19 in both China and many developed countries. For instance, with support from the company, the construction of the Leishanshan Hospital in Wuhan was completed within a short time. Next, let's discuss the development of autonomous driving technology, which is accelerating in tandem with electric vehicles. Next generation technologies such as artificial intelligence and 5G continue to develop with each passing day. These technologies will transform the auto industry to achieve higher levels of intelligence and connectivity. Autonomous vehicles are the undisputed future of the auto industry. Large-scale development of this technology will provide unprecedented road safety and traffic efficiency throughout the world. These social and economic impacts will also be huge. China is one of the few countries in the world that is able to provide complete solutions for autonomous vehicle technology at level 4 and above. As you can see from the chart, some Chinese autonomous driving suppliers rank among the top global companies in operational data terms. Autonomous vehicles are sure to become a noticeable driver for China-related industry chains in the coming years. For example, the recent shortage of in-vehicle chips has provided a valuable opportunity for Chinese suppliers to offer import substitutions. Finally, we are also optimistic about the consistent upgrade of smart hardware. From the smart earphones and watches of today to the virtual reality and augmented reality of tomorrow, each of these technologies represents a vast number of investment opportunities. Chinese consumer electronics brands have the ability to compete on the same stage as leading international companies. Chinese hardware manufacturers are becoming increasingly vertically integrated. The depth and breadth of Chinese involvement in industry upgrades continues to increase. This suggests that Chinese companies will see financial benefits from upgrading to the smart hardware industry. With the launch of 5G and the improvement of hardware parameters, we believe that augmented reality will follow in the footsteps of smartphones, and true wireless stereo will become another smart hardware heavyweight. Investors should rest assured that we will make dynamic adjustments to our positions from time to time, which is based on the global market situation and each company's own fundamentals and valuations. The future risks are mostly centered on the tightening monetary policies of the US and globally after the pandemic is officially over, although it is too early to tell. We believe the earnings growth in quality Chinese companies will eventually be able to offset the contraction in valuations and outperform most assets. The most important point to note is that we are very confident in China's future development. The era of Chinese innovation has only just begun. We hope that even more investors, especially international investors, can come together with value partners to unearth more outstanding Chinese companies. Let's grow with them and share in those profits brought about through value creation.